Hi everyone, my name is Marilena Portillo, and this day I'm going to talk about hotel occupancy tax. So first, what is the hotel occupancy tax? Is an indicator that shows the number of rooms rented compared the total number of rooms available. So although it is not a term exclusive to the hotel sector, in this way we will focus on it. So this indicator is calculated in percentage, taking into account that the ideal is to reach 1000% occupancy. In this video, I will explain what the occupancy tax is, how it is calculated, and how it is compared with other profitability indicators to evaluate the financial health of hotel establishment. So, who is the responsible for this tax? First, hotel owners, operators, or manager must collect the state hotel occupancy tax from their guests who rent a room or space in a hotel that costs $15 or more per day. The tax applies not only to hotels and motels, but also to a bed and breakfast, condominiums, apartments, and houses like Airbnb. So local hotel taxes are even applied to dormitories that cost $2 or more per day. So many owners rent their houses or rooms in their houses to people who attend this event of for holiday season, to foreigners and nationals who wish to spend and stay one or more nights. So people who rent their homes must collect a hotel occupancy tax for their customer in the same way that a hotel or motel collects tax from its guests. Property management companies, online travel companies, and other third party rental companies may also be responsible for collecting the tax. So, the cost structure of a hotel. The cost of the operation of a hotel is summarized as all the resources used in the process to the guests and users. They are classified in fixed and variable costs, including expenses for food and beverage, energy, and inputs, as well as remuneration, depreciation, marketing, and sales, maintenance, taxes, and other expenses that originate as a result of the hotel activity. Most hotels have a high proportion of fixed costs due to their installed capacity. This leads to facing an instability that is not common in many other activities. So, because the largest cost burden in other in fixes, the best way to address productivity challenge is to become more efficient from an operational standpoint and increase revenue. So, how much is the hotel tax in El Salvador? So we have an article 37 says all companies benefit from the incentives established in this law must contribute 5% of the profits obtained during the exception period. That percentage will be added to the special contribution established in this law for the promotion of the citizen. So taxes, most of the goods and services are taxes with a 13% value add tax. Um, and also the tourism, since there is a 50% tax on the value of the accommodation. So Who pays the hotel tax? All the individuals or legal entities that receive income derived from the provision of the lodging service in any of its modalities are obligated to pay this tax. For example, all the companies who make the service, tourist service, um, who give a hotel, motel, and house, who give the service a room, some another service like breakfast and other things. Um, in this case, we need to put the tax for El Salvador. So, what is the formula to calculate the occupancy tax? How and when it is used in a hotel? So, it's important to constantly measure the occupancy tax of a hotel, since this metric is key to evaluate and improving profitability. A low occupancy tax can impact financial health, so knowing how to calculate and use the indicator is essential. So to calculate the occupancy tax, you can use the following formula. First, number of occupied rooms, then total number of rooms, 4,000. To get an idea of what that calculation might look like in a real context, let's look at the following sample. Suppose your hotel has 50 rooms and you book 15 of them last night. 15 with 50 for 1,000 is going to be at 30%. So the occupancy tax or index of your hotel is 30%. As you can see, is the result is contrast with the 1,000%. We have a low percentage. This figure show you that there is a potential for improvement since you have a more free rooms than occupied. So um, the occupancy tax should not be confused with the vacancy rate, which is calculated as low number for units available for 1,000 and then total number of units. Going back to the previous example, if you have 15 room reserved of a total of 50, it means that 35 of your rooms are free. So to calculate the vacancy rate, the calculation will be like this. 35 for 1,000 and 50 is like a 17%, 70%. Your vacancy rate is 70%, while your occupancy rate is 30%. In an ideal world, you will want this number to reverse and your occupancy to be even higher. So you need to be really um, focused on that percent. So average occupancy tax in the hotel industry. It is good to know the average occupancy tax for your region and other touring spots. So these are data of the most recent occupancy tax of the different continents. For example, Europe use 43%, Asian 38%, Australia and Oceania 47%, Middle East have the 56%, Africa 40%, and South America 40% too. So this percentage about all all countries. So with the next question is what is the importance of the hotel occupancy tax? Well, it's a barometer of success in achieving reservation. In addition, this indicator allows you compare data to identify trends. Find out what your high and low seasons are, your average stay, the impact that the local events and festivity have on the number of every night stays, how the hotel price index varies, and if your marketing campaigns generate results. So if your occupancy tax is 30%, as in the example we use above, you may need to adjust your social media marketing and pricing strategy or reduce operation costs to increase your results. Over time, your business can recover from having a low occupancy tax, but you have to know it is low to release this a problem. So we have the characteristics of the hotel industry. In the hotel industry, the production and consuming of the service are generated simultaneously. First, we have gastronomy, a part of the food that is not sold, imperishable, both in the form of raw material and processes. So the hotel produce is entirely different. So the financial economic activity of the hotel is very short cycle. For example, this structure of operation with cyclical change give rise to the so-called high season or maximum level of production and low season with little or no income. So another characteristic is the cost structure of a hotel because most hotels have a high proportion of fixed costs due to their instant capacity. This leads to facing an instability that is not common in many other activities. So the ways to increase the hotel occupancy tax. First, modify your pricing strategy. For example, dynamic pricing, value add pricing, segment pricing. For example, the dynamic pricing is about this type of pricing strategy involves adding room based on local market conditions and competition hotels in your area. For example, if there is a local event that brings a lot of people to town, you can increase your price knowing you will continue to fill your rooms. So, in another, the value add pricing is another way you can increase your riders your taxes by including additional service that your competition don't offers. For example, the price of your hotel room is $50 because you offer the breakfast, toiletries, and other extras that your competition is $30 hotel rooms doesn't not. And then we have the same price segment. So incentive guest book at your hotel, you can offer lower price for specific length of stay or by the number of room booked. So another way to establish restriction for the duration of each stay. So if you have a space available in your accommodation, one way to feel it will be using restrictions to the duration of each stay. Another, avoid overselling. Um, Use a large number of establishments and large hotel chains to increase occupancy. The tactic is based on the assumption that there will be cancellation or no showing. So For my conclusion, I have third. First, that occupancy hotel tax and determining can be decisive to progress and obtain more benefit. Um, it's like a win to win with the users and the owners. And then we have once you know occupancy tax, you can start to identify trends and act accordingly to achieve more success in your business because you're going to detect more strategies uh, to win with the competition. So the third conclusion is increasing your occupancy tax is an effective way to ensure that you meet your financial goals. So thank you for watching. I hope you see you in another day. Bye. Thank you.